where you're located across the country, either good afternoon or good morning. So it's an absolute pleasure to be with you all. We're excited about our relationship with NAMBA and the things that NAMBA is trying to accomplish, and just thrilled to be a part of this today. And hopefully we can share some information with you that will allow you to ultimately close more loans. And that's really why we exist. You know, the one of the things that I love about anytime I have a chance to talk to loan originators or realtors sort of across the country, we all share this common bond of expanding access to home ownership across the United States. And it's one of the things that I love about the mortgage business is it's just we're all the same that way. We're all trying to accomplish the same thing. And certainly I'm fortunate to be in a position to be a regional sales manager for Angel Oak Mortgage Solutions. I cover the northwest portion of the United States for them, and just happy to be with you today. And hopefully we can teach you some things about the non-QM business that will help you close more loans. So just a quick overview of what we're going to talk about today. I'll tell you a little bit about Angel Oak, just to give you a sense as to who Angel Oak is, what we do, a little bit about the non-QM business, and maybe share some things with you about how we think you might be able to identify some of these borrowers and actually expand your business by trying to identify some of these borrowers. So again, thank you for the time. And let me tell you a little bit about Angel Oak and who we are. So Angel Oak Mortgage Solutions we're about 6 years old. We are one of the largest originators of non-QM product across the country. And we are a vertically integrated organization. So if you look at the business today and the way that the non-QM market has evolved, there's basically two types of companies. There are aggregators. These are mortgage bankers that originate loans to sell to somebody else. And then there are end investors. And Angel Oak is one of the end investors. All the loans that we close, we actually sell to our sister company, Angel Oak Capital. And they take all those loans and securitize those loans directly on Wall Street. And that is one of the reasons why we consider ourselves one of the market leaders. Not only are we doing more volume than most, but we're also securitizing more business than anybody else. And this is all that we do. Other lenders that are jumping into this space sell multiple products, agency loans, and non-QM. We are specializing only in non-agency business. And we think that makes us and sort of separates us from the rest of the pack. We have two different channels that you can do business with us. You can either do business with us as a broker, which we love. It's sort of how we started. We started in the business we started in the wholesale channel, and a lot of our business comes from there. But you can also do business with us as either a delegated or a non-delegated correspondent lender. So we give you both options. And as I said to start, we've been one of the largest securitizers of non-QM product across the country. Since we started, we've actually had 11 securitizations totaling $3.2 billion, and a lot of that has happened in the last 6 months. This year has been very, very busy. We'll get to that just in a little bit. But the other piece of really good news and sort of confirmation for Angel Oak and the market is that we are now receiving AAA ratings on all of these securitizations. When we first started, most of the people that talked to us really didn't think we'd ever be able to achieve AAA ratings on these securities. Given the market crash a decade and a half ago, most people thought that we wouldn't be able to achieve those ratings. But because these loans are performing so well, the rating agencies have stepped up and agreed with us that these are reasonable loans for reasonable people. So just some really, really exciting things happening in the non-QM space, and we're happy to be the market leader. One of the things that we do pride ourselves on is our high priority to serve the customer, and these are some of the things that we do as a result of that. We give you access to our underwriters. So if you're doing business with us, we don't put our underwriters, we don't make them untouchable. If you have all of these loans that we do have some sort of story with them, and sometimes it takes getting on the phone and working through that with our underwriting staff to help get a deal done. And while we take a common sense approach to underwriting, sometimes a conversation about it to help us make sense of that helps. And so we do provide you access. We've got a great website that I'm gonna teach you about that we think helps you as an originator get into the non-QM business a little bit easier than some of our competitors. And one of the other pieces that we have, so wherever you are across the country, we've likely got an account exec that's covering your territory. So we have over 100 account execs today, and where we don't have somebody in your physical market, we've got a group of inside reps in our Miami office that will cover markets where we don't have a physical presence. But our approach is to have local people calling on local brokers, and that's a big difference from most of our competitors. And one of the things that again, as the market leader, one of the things that we've really tried to do over the last 6 years is not only to grow our business, but to help you grow yours. And that's really what we're here to talk about today. And a big part of that is using the non-QM product to help differentiate yourself from your competitors, the people that you're trying to get business from, the people that you compete with on a day-to-day basis. A lot of them haven't implemented the non-QM product as part of their core product line, and we think that's a mistake at this point. We think that those of you who are on this call today are a step ahead of your competition, because you're not only are you willing to originate this product, but you're willing to spend some time out of your day to learn a little bit more about it. So we're appreciative of that, and like I said, it's been a big portion of our mission to help educate originators. So a little bit about our growth, real quick. We've been growing like crazy. We continue to do so. In 2017, we closed $1.1 billion worth of non-QM product. Last year, 2018, we doubled that production and are now and closed $2.2 billion worth of non-agency non-QM product. And we're expecting more this year. We're expecting to be in the $3.5 billion range this year. So really continued expansion, 118% gain year over year, and big increases. And as a part of that, our staff has grown by about the same percentages. So we've been growing our ops staff across the country. We have our corporate offices in Atlanta, and we opened up a second ops center about a year ago in Dallas, Texas, to help keep up with the continued growth in the non-QM business and certainly the continued growth for Angel Oak. So we're excited about the development. So what is alternative lending? What is non-QM? What does it mean today? So there's a big difference between the old and the new. So this is not your old subprime. This is a completely different world that we live in today, and a lot of times we hear this and it's just not the same. So in 2006, the average credit score for a non-QM subprime loan was 580. Today, the non-QM business, our average credit score is hovering around the 680 mark. In 2006, you really didn't need much proof of income. A lot of stated loans, a lot of NINAs. Today, we require documentation to prove the borrower's ability to repay. It's a completely different loan today than it was 12, 13, 14 years ago. From a down payment standpoint, we were doing a lot of 80/20s, piggyback loans, no down payment, no skin in the game. Our max LTV today is 95%, but our average LTV is below 80. So again, these are good loans, and then obviously one of the big differences that you guys recognize and we recognize and actually appreciate is that there's more regulation today than there used to be, and we think that's a good thing. So as this market continues to evolve, we do think it's important that there is regulation that stops us from as an industry moving down a path that we shouldn't move down, and we've already seen that in our business, and it's been a very, very positive thing for the development of the non-QM space. Really, ultimately, what we're trying to do is, as I said in the beginning, is expand access to home ownership in a reasonable kind of way, and we think that we have found the solution to that. And so it gives you a little bit of a sense. So this is probably one of my favorite slides of the presentation. This gives you a sense as to what the possibility is for the non-QM space. So if you look at where we were in 2001, 2002, and 2003, the securitizations that were done on the loans that were originated during this period of time have actually performed very, very well relative to the securitizations that happened after that in 2004 through 2007. We think this was a period of time where we really believed that the non-agency portion of the business was a reasonable business. We hadn't gone to 100% financing yet. We hadn't dropped our scores down to 580. These were really, really reasonable loans. And if you look at it, it was about 10 to 15% of the overall market. Well, today, since we started, you can see that the non-QM, non-agency securitization issuance has been almost nothing relative to the rest of the market. We've been running at about 1% or less of the overall market. So we just believe that as the market continues to grow, that we will eventually look like the market looked like it was in 2001, 2002, and 2003. And this gives you an even closer look at the securitizations that have happened since 2000. And obviously, when you put it in perspective this way on this graph, you can see that there's virtually only room to grow from here. And if you think about it again, in terms of overall market size, if you take sort of a 10% a share of the market, last year I think the total originations in the mortgage business were around 1.6 trillion. So if you take that 10% factor and apply it to the non-QM business, we think that in the next 3 to 5 years, the business should be running at about $150 billion worth of business rather than what it's running at today, which last year I think we were at $12 billion worth of issuance. So lots of room to grow. And the question really is, what is it? What part of that growth? What part of that share are you gonna get? And it's the people, like I said, it's the people that have hopped onto this call. It's the people that have done business with us already. Those are the ones that are going to put themselves in a really, really good position as this market continues to grow, because you're going to be the expert. You're going to be the one that got there before everybody else. You're going to be the one that is developing a brand for your own self as a non-QM expert, just like Angel Oak. So again, exciting times, and to speak about that specifically in terms of the quality of these loans. I talked about the AAA ratings. Well, this is just sort of proof of how good these loans are. So at the end of 2018, one of the rating agencies, Fitch, did an analysis of 11,000 loans that have been securitized since 2015. So it was about three and a half years of performance on these securitizations. And of those 11,000 loans, only 8 had entered foreclosure. This is incredible performance. If you look at that relative to the rest of the agency market, it's better than agency performance. So it's really, really just confirmation for us that we're originating really, really good loans. And secondly, you should not be scared about jumping into this market. These are reasonable loans for reasonable people, and we think we've got a lot of evidence to prove that. Okay, so we'll just talk a little bit now about where these loans are coming from and what we think that the market opportunity. How are we going to get to $150 billion? If we're only at 12 now? How are we going to get there? Well, first of all, we take a look at the people with credit scores below 680. And I think a lot of you will be surprised to know that over half of the households in the United States have a credit score of 680 or below. So 680 we find to be sort of that agency threshold, agency jumbo threshold. If you get below that, things start getting a little bit squirrely. We have lots of products to offer people that are below 680. And then even more so, a third of the households in the United States have credit scores below 620. And once you get below 620, it gets very, very difficult, very challenging to get agency deals done. And we provide products that can help you overcome those credit scores. And then one of the biggest products that we sell is our bank statement product. We'll talk about that in a little bit more detail a little bit later. But 17+ million self-employed borrowers in the United States. And these are borrowers that walk through your doors every single day and can't get financing because their tax returns don't support. They use the benefit of the tax code to write off as much as they can, and as a result of that, a lot of times they don't qualify for agency transactions. And we provide access to home ownership for these borrowers through our bank statement product. So 17 million plus today, but the projections are that because of the gig economy, the increase in the gig economy and other jobs that are sort of non-standard self-employed jobs, we think the estimates are that by 2020, there'll be 42 million self-employed borrowers across the United States. And again, that is just a massive opportunity for you to become an expert in this business to help grow your production. Then, obviously, the number of foreclosures has declined dramatically, 18 million plus since 2008, since the crash of the market. But you'd be surprised to know that that there's been quite a few foreclosure filings in the last 12 months, 1.5 million foreclosure filings. So borrowers, even though the economy is good and things are good, people have problems, right? So people have issues in their life, and credit events, big credit events come up, and the gap that one of the gaps that we try and fill, in addition to our bank statement product, is products that are available for people who have had a credit event in their life, but they have their life back on track. And you know those people every single day. I know them every single day. Life happens, and we want to still provide access to home ownership in spite of those problems. So whether or not it's a foreclosure or a bankruptcy or a foreclosure or a deed in lieu or something's happened, we still have programs that allow you to qualify for financing. So this is one of the charts that we like to show. This gives you a sense as to where loans are getting rejected by agency lenders. And if you look at that top line, debt to income ratio is the number one reason why borrowers are getting rejected by agencies. 21% of first-time home buyers are getting rejected because of debt to income ratio, and we provide DTIs up to 50% on the back end, 40% on the front end, and we absolutely know that helps people qualify for more loans. Second reason is lower credit scores, and we've already talked about that. We have multiple products that allow you to provide financing to borrowers with lower credit scores. And then the last one that I'll talk about is income was unable to be verified. We've talked about those are self-employed borrowers, and they just don't have enough money coming through their bank statements to qualify. Through their tax returns to qualify, but they have enough money coming through their personal or business bank statements to help justify ability to repay. So really, really interesting graph that outlines why people are getting rejected. We're sure if you're in the mortgage business, we're sure that you're experiencing these rejections as well, and really is the first step into the non-QM space, which is fallout. That's the first step. Is not walking away from deals that don't work on the agency guidelines for whatever reason. We think on each of those loans, you should pick up the phone and call your Angel Oak account exec and say, hey, I had a deal fall out on the agency side. Can you guys do it? Here's the issue. Here's what the loan is. Can you help? We think that's the first step into the non-QM business. The second step is to actually market the product and go out and look for these borrowers. But certainly the first step is that fallout. So why originate non-QM loans? This has been a big question. We walk into a lot of offices every single day, and they say to us, we don't do those loans, and we say why. And so here's why. Here's why we think. Number one, you increase your earnings. Okay, we don't want you to have to walk away from those agency fallout loans. That you shouldn't have to. You should be able to continue to do those loans and close those loans because again, they're reasonable loans for reasonable people, and that's as we talked about the first step into the non-QM business. The second reason is obviously if you get one of these deals done when your competitor wasn't able to get it done, you become the hero. You become that person that they're going to look to the next time, not only for their agency business, but for the harder transactions. These are the ones. Those are the ones you want because that helps strengthen those relationships. Whether or not you're getting referrals from your realtor partners or from CPAs or bankruptcy attorneys or even your sphere of influence, word will travel because you were able to get that tougher deal done. And then lastly, we believe that this is a 2-for-1. We believe that not only will you be able to help the person out who's had a credit issue today, but as they get their life back on track over the next 12 to 24 months, as long as you're staying in touch with those borrowers, we think that you should very, very easily be able to put these people back into an agency loan at some point in their life, and probably sometime in the near future, 12 to 24 months, especially if it was a credit issue. We think this is an opportunity for you to do this loan today, but also a loan sometime down the road as they have continued to right their own ship. So again, really, really good reasons. So obviously you do more loans. We've talked about the underserved market, lower credit scores. We've talked about how many people exist that have had a credit event, some sort of credit event that has impacted their score. The agencies, once you get sort of below 7 years, it becomes difficult to get agency deals done on major adverse credit events. And then we've talked about our self-employed borrowers, biggest portion of our business. And there's lots of these borrowers that exist today and who basically haven't been able to get financing for the last 10 years or so. They haven't had an option. If they didn't qualify for an agency loan, then the only other potential option was a hard money loan. And that's the same thing. That same thing holds true for your investors. They didn't have any other option. They either if they didn't qualify for that agency loan, then the only other option was for them to go get private financing. If they wanted to close in an LLC, they didn't have an option. If they had a lot of properties financed, the only option was hard money. It was the only thing and we try and fill that gap in between the conventional business and the hard money business. It's one of the big reasons why we exist. And we believe that if you do all of these things, that you will differentiate yourself with your borrowers and with your referral partners. Whether or not it's your realtors, again, or realtors or sphere of influence or whatever it is, we think if you become the expert today, you're going to have the opportunity to be the standout resource for all of your referral partners. And you're going to do that because you're going to be doing loans that your competition doesn't know how to do yet. So we're glad that you're taking the time to educate yourself, and we're happy to be a part of your growth as you step into this space. All right, so how can non-QM loans help you close more loans? And again, we stop turning down loans that make sense. And so, one of the things that's happening in the business overall, this is a really, really complex slide that basically just is saying to you, your refi business is probably dropping and your purchase business is probably increasing. Now, we've had a little bit of a window because it sounds like rates are coming down and they may come down in the near future. So you might see your refi activity jump a little bit more than we were anticipating originally. So this graph might shift a bit, but ultimately rates are relatively low, and we think the market is trending towards the purchase business. And we consider the non-QM product line a pipeline replacement for that decline in your overall refi business. So it's a way for you to increase your overall business, even though you're losing some of your refi volume. And then here, these are your underserved borrowers. Again, we've talked about this. These are just some of the people that we like to say are our borrowers, people that we provide access to homeownership to. And so ultimately, why does this matter to you? And really, it's about putting money in your pocket. So if you look at this, and this here, you guys are all across the country, so sometimes these loan amounts don't really apply. But this is if you do one of these a month, and you have a $500,000 average loan amount, we believe the earnings on this equal about another $60,000 a year. Having said that, we have some of our best partners. I think our top loan officer today has closed to date about $14 million worth of business just in non-QM. This is our number one loan officer that we work with. Happens to be in Colorado. Really, really good producer that has done the things that we're talking about. Has separated himself. Has become an expert. Has become the guy in the spaces of non-QM in his market. And he's been able to capture this massive market share by doing some of these things. So the numbers can be obviously much larger than this, but we're just taking a very, very conservative estimate that we think you should be able to close at least one more loan a month and increase your earnings. So who are these borrowers? And we share these stories about people that we've closed loans for, and these are real instances and should be good examples for you, because I would imagine you have self-employed borrowers just like this couple here that runs this bakery, coffee house, and writes basically everything they can off, but they have enough money coming through their bank statements to justify ability to repay. So this couple here, they earn $200,000 a year, have a credit score of 710, but they take advantage of the tax code and write off a lot of their business. So because of our program, they were able to get approved for a loan of $750,000 and were able to buy a house. And if you think about a lot of these self-employed borrowers that have had these businesses, they're not often buying first-time homes. There are a lot of move-up buyers, a lot of people buying bigger houses, really providing an opportunity for you to expand your business. And we talked about credit issues. So this client was forced to push their closing back, and it impacted an IRS tax lien, and it impacted their credit score. So they went from a 684 score down to a 714 score, and kicked them out of agency guidelines. And with our product, they were able to qualify because we were able to provide them financing in spite of their lower credit score. It's a perfect non-QM loan. Now, sometimes it doesn't always happen this way, where they're in the middle of a transaction and their score drops. But a lot of times, it's, you have somebody walk in and they think they have great credit, but they really don't. And those are the people that we hope you don't walk away from. Those are the people that we hope that you call your Angel Oak account exec to discuss financing options. And then obviously you have, we talked about this, lots of people that have recent credit events. And again, these are borrowers we hope you don't walk away from. We have options all the way down to 1 day out of bankruptcy, 1 day out of foreclosure, 1 day out of short sale deed in lieu. This particular situation, they were buying $1.3 million. They had a bankruptcy that occurred just over 2 years ago, and our second highest credit grade product, our Portfolio Select product, allows bankruptcies that are just over 2 years. And this person, as a result of that, was able to qualify for a purchase of $1.3 million home, either primary or secondary or second home. And then one of the other big products that we offer is our investor cash flow product, or just our products for investors. This one in particular is our investor cash flow product. It's an incredible way to get into the non-QM space because it's a really simple loan to sell, and it's a simple loan to process and close. All we're really looking for is the borrower's credit score and does the property cash flow. If the property cash flows market rents less PITI and you have a positive number, 0 or a positive number, will allow you to go up to 80% financing on our investor cash flow product. If you have someone who just doesn't quite cash flow, we'll actually allow you to have a 20% loss on the property and go up to 75% loan to value. Just a really easy loan. Again, it's a simple loan to get into. Certainly one we think that you should be talking to your Angel Oak account exec about. So again, this is sort of a summary. The largest portion of our business is self-employed borrowers who write off a lot on their tax returns, but again, they have enough money coming through their personal or business bank statements to qualify. So the first thing that you do when these people walk through your door is, instead of turning them away, you ask after looking at their tax returns, well, you're not going to qualify under agency guidelines. The next question that you ask, is, well, let's look at your bank statements. And let's see, how does your money come through? Does it mainly go through a personal account? Does it mainly go through a business account? And then you start evaluating that, and we'll help you with that product. So bank statement products are the biggest portion of our business. But the second biggest portion of our business is that fallout, prime jumbo fallout, agency fallout, any deals that fall out of agency product for credit, DTI, residual income, whatever it is. That's sort of the second biggest portion of our business. The next biggest portion is our non-prime product. Some people that have had these credit events that we're talking about. But then we also have some really cool programs like we talked about, the investor cash flow product, and if you have a borrower who has lots of liquid assets, this is another great loan that we love, and and we don't think gets utilized enough, is you have somebody that's got lots of liquid assets. We'll use those liquid assets as basically their ability to repay. So if you have somebody that's trying to buy $1 million house and they've got $1.2 million in the bank, after closing, then we're good. You meet the standard, and it's just a really simple loan. Again, we try and look at these loans and use common sense in our underwriting. And these are just some examples of some of the things that we can do. So then once you've decided that you're gonna sell this product and you're gonna jump into this space with us, then the question becomes, where can you find these borrowers? The first step is just spreading the word, letting your referral partners know that you have the ability to help close these loans. And then once you put the word out, once you start promoting yourself as an expert in the industry and telling people that you can close these types of transactions, your referral partners will do, as they should, do the work for you. That's where a lot of your business is coming from, your sphere of influence, your realtors, your CPAs. And again, this is the biggest portion of, like, if you're not talking to your realtor base today about these products, we think that you're missing an opportunity. So what would you rather pitch to your realtor partners? I am John Wise, and I provide great rates, great service, and I'm a really nice guy. Or would you rather say to your realtor partners, I have great rates, great service, and I can help you get those tougher deals closed. I can help you with your self-employed borrowers. I can help you with people that have had a credit event. I can help you, realtor, close more loans, sell more houses, because you're going to work with me and because I have access and I'm an expert in the non-QM space in addition to the agency space. We think that's a great pitch, and we think that's what you should be selling today. Other LOs, a lot of loan officers across the country work for big banks, big credit unions, and they do not have access to these non-QM products. This is a huge opportunity for us. Lots of our partners across the country are utilizing this as a way to expand their business, because why not? These are people that you work with. These are sometimes you actually compete with them. But if you walk into if you have a good friend of yours who's a loan officer in the business, they work for a bigger bank, they don't have access to this product. What are they going to do with those borrowers? When they walk into the bank, they're going to turn them away. Better off turning them to you than turning them away completely. So you need to make them aware, if they're not selling non-QM product themselves, that you're the source. Builders and developers, we have a lot of smaller builders and developers that don't offer non-QM products, or at least their partners that they work with don't offer it. So we think that you should be walking into these offices and having discussions with builders and developers across the country about the fact that you are an expert in the non-QM and you can help them close these. You can help them close these loans. And then accountants, financial planners, who knows better about the borrowers that write everything off but have a lot of money coming in. These are the people that know where these bank statement borrowers exist. They can help you generate more loans today if you're having discussions with them about the non-QM space and about the fact that you're an expert in this market. They absolutely can help you close more loans. And then bankruptcy attorneys, obviously this is a good source of business for people that have had a bankruptcy at some point and that might qualify still for a purchase. They can help you expand your book of business if you're having discussions with these bankruptcy attorneys and talking to them about the products that are in that Angel Oak offers to help you close more loans. So that's sort of where the borrowers are. Now, sort of how do you market yourself? Well, there's lots of ways to do it. Social media, direct mail, realtor presentations. And the great news is, because we've been doing this longer than everybody else, is we now provide access. We've done all of this work for you. So if you're an approved broker, approved partner with Angel Oak, you will have access to all of this information. And so I'm gonna just hop out of here real quick, and I'm gonna show you just so you can see for yourself. So this is our TPO portal. Let me take you to the beginning. And these are some of the nice people that work for us, some of our account managers and our account management team, some of the people that work for us. And one of the things that we offer in this training section, actually, sorry, in the marketing, I got to log in. Sorry, just give me 1 second. Hang on 1 second, bear with me. So as I'm getting here, one of the things that I'm going to show you is, like I said, we've done all of this work for you. So we've created marketing material, flyers, social media, PowerPoint presentations, all unbranded, so that you can take all of this information. I'll give you a sense. Here's our flyer portal. So look, yeah, we have a flyer on our 95% LTV with no MI. Here's a flyer on our bank statement product. Here's a flyer on recent bankruptcy and foreclosure. So if you want to go market to your bankruptcy attorneys, you can do that. Here's a flyer that we've developed specifically for CPAs to talk about alternative income and the non-QM space. Here's a flyer that has highlights of all of our products if you'd like to promote that. Here's Jumbo Flyer, our investor cash flow product. Great product to market for yourself. And then in addition to that, we've even done some marketing so we have a couple flyers that are done all in Spanish. So if you have a Spanish-speaking clientele, we've developed some of this marketing for you. It's already done and in Spanish. And then we've actually done the same thing if you have people that speak Chinese or Mandarin. These flyers should accommodate those people as well. But the great news is that we actually do this so that you can market yourself. So if you take a look at our bank statement flyer, you put in your own information, your name, your cell, your email address, any of the disclosures that are important to you, and what do you get? You get a flyer that has your logo. There's actually you actually can upload a picture as well if you'd like to, and it has your information. And if you look, there's nothing on here about Angel Oak. This is all about you and your own development and your ability to produce business. So this is one of the advantages of doing business with us rather than doing business with some of our competitors. And we think it's an incredible advantage and a way for you to grow your own business. The other thing that we do offer that also makes it really easy for you to jump into the non-QM space is a really intuitive website. So if you look at this is one of the things that I love about our business and about Angel Oak is we provide you with access to our quick quote pricing tool. This tool allows you to drop in some very, very basic pieces of information. I'm already logged in. It might ask you to log in, and you can use AOMS as a client, and you can log in for free, and you don't have to be a partner to use this. So if you drop in, so this is showing no values, but if you drop in some basic pieces of information, 720 score, 500 to 750 loan amount. I'm going to do 75%. They're clean on their mortgage. It's a purchase, but we're going to use 12 months business bank statements. And when I put in that information, it gives me options. So you'll see here that we have two different products that qualify for what we just input. Our platinum product is our highest credit grade and best priced product, and it's 75%, which is what we asked for. Our rate today is at 4 5/8 on a 30-year fixed loan. 5/1 or a 30-year fixed are both priced the same today.
Hey, John.
Yeah, Tiff.
Hey, I'm just letting you know that there's 15 minutes left in the webinar.
Awesome. Thank you for that. I appreciate it. We want to try and stay on track here and keep this at an hour as we promised. So I appreciate that update. So again, if you're using this, this is a great tool, and we would encourage you to go to our website angeloakms.com, and on our homepage, you will see. Let me just show you our homepage. Right on our homepage, there's a tool right here called Quick Quote, and that's what I pulled up right here. And you can use that. You put in this information, and it gives you options. So let's say and then you can manipulate this. So let's say, well, they have 700 credit score and actually we're going to go above 750, and we're going to go a little bit more on the loan to value. You can change all this, and again you'll see it change the pricing. So we're a credit. It's risk-based pricing. So higher LTV, higher rate. We're still at 5% on a 30-year fixed at 80% loan to value for somebody using bank statements to qualify for income. Again, great tool for you to use as one of our clients to help you while you're sitting there with the client. You pull up this tool and you can tell sort of on the fly whether or not you have the basics of a transaction in place for you to move forward. So there's two things that I would say. As we're sitting here, one is that sometimes you put in information and it says, I can't help you, okay? So I changed the credit score to 580, and it says there are no qualifying programs for above selection criteria. The most important thing here is that you still pick up the phone and call your local account exec. Because there may be something you did wrong. Maybe there's something that we can still help you with. Maybe there's a way that we can structure it. These loans all have stories, and we would encourage you to call your local account exec to try and figure out whether or not you can still structure a transaction, even if you get a no on your pricing tool. Now, you may ask, how do I get in touch with my local account exec? That's a great question. And we actually have a tool on our main home screen, angeloakms.com, called Find an Account Executive. And if you click on this, it brings up a map, and anywhere you click in the United States, it's going to pull up. I'll pull up Washington because that's part of my territory. There I am, and then we have two account execs that cover Washington for us. You can get in touch with either of those people, and they can help you. The states that are grayed out are the only states that we're not approved in, but we're approved in most of the country, and hopefully can help you wherever it is that you're located. So that let me just go through this. So that really gets us sort of to close to the end. But one of the last things that we would say to you is that we know we're not the only ones in the marketplace. There are plenty of people that are doing non-QM business today, more and more so every single day. We have more competitors that come into the space, but we do think it's important that you look at who you're choosing to do business with before you move forward and start originating these loans. You have to move forward with somebody that you can trust. You are basically, when you're doing these loans, you're handing your commission check over to the lender that you choose. So are they customer-centric? Are they focused on you? Do they allow access to their underwriters? Do they allow access and communication and open communication with not only the account exec but the ops staff? Do they have a website that's functional that you can try and get some of these deals done? Are they specialists in this space? Do they focus solely on non-QM? If they're not focusing on non-QM, there's a really good chance you're going to get a loan in and something's not going to go right. We've seen it time and time again. We'll lose loans to a new competitor, and then 2-3 weeks later we get a call and say, hey, my deal fell out, can you help? Because it takes a certain type of underwriter, it takes a certain type of company to focus on these products. And obviously we've been through a lot today. Quick Quote, we have what I didn't even get into with you guys because we're running a little bit short on time is our pre-qualification tool. So every single loan that you originate is going to go to your account exec first, and they're going to tell you up front whether or not that you have the basics of a transaction in place. They're going to try and identify all of the pitfalls that could happen as the loan sort of moves through the system and help you submit a better loan. And we believe that those types of resources, not only from an operational standpoint, but from a marketing standpoint to help you market yourself, make us different than a lot of our competitors. And obviously nobody's been doing this longer than we have. We are the one of the first non-QM lenders in the country and have been doing it at a high level for 6 years now. And, you know, we do everything we can to help make the process simple. And if you pick somebody that isn't focused on really working on how to make this business easier for you, we think it's a mistake. So that is sort of the summary. You know, and again, just to finalize, you guys are out there every single day, and I have incredible respect for loan originators and realtors across the country, because what you do every single day is not easy. This is a very, very difficult business, and I think it continues to get harder every single day. So we have a lot of respect. I personally have a lot of respect for what you do every single day, and we fully believe that this is a way, the non-QM, that what Angel Oak is doing and trying to accomplish is a way for you as an originator and a realtor to help differentiate yourself from your competition. So we hope that you utilize the tools that we've talked about. And Tiffany, Kenyatta, do we have any questions that have come up? I am having trouble seeing. I see the chat window, but I don't think I see. Oh, here's one question. I do see one question. But the tax reform eliminated line item tax deductions. Can you elaborate? Oh, gosh. So I thought the recent tax reform eliminated line item tax deductions. Can you elaborate on that? I probably would be better off not elaborating on that, because I'm not an accountant. I'm not a CPA. I'm a mortgage guy. But I can tell you that what I can tell you is that we get loans all the time from people who don't qualify with their tax returns, but they do qualify with Angel Oak product. We see that all the time. So I wouldn't be so much focused on that, but I would be focused on really how you can separate yourself from the competition. And currently, unless we get to this point where it's a flat tax, you're still going to have these issues. And we still believe this is a really, really good loan for you to do. I do see one other question that came up, and that was whether or not we make exceptions on our loans. And the answer to that question is yes. We make exceptions to our guidelines all the time. As we have grown, we've gotten better at this. So we've expanded our guidelines to a point where we don't have to make as many exceptions as we used to in the past. But if there is a reasonable loan that we think makes common sense to do, then we're going to do the best job we can to help get that deal closed. They happen every single day, and we've got a group of people that help facilitate those exceptions, so that we can try and deal with most of them up front, rather than sort of partially through the transaction. So that was a great question, though. I appreciate that. Somebody did ask whether or not there was a way to see whether or not the company that you work for is approved. My best advice would be go to our Find an AE page on our website and get in touch with your local account executive, and they can figure out pretty quickly whether or not you're approved. Certainly, you can always get in touch with me as well, but certainly find your account exec is a way to do that. We've talked a little bit about marketing, so that must have come before we talked about the marketing page. How does a broker get paid? And we offer both borrower paid comp and lender paid comp for our wholesale broker partners. So once you get approved, you'll have the ability to choose whether or not you want to select borrower paid comp or lender paid comp. And once you pick that path, you'll have to stick to it for a quarter, and then you can change it any time. Let's see. One of the questions was whether or not we use personal bank statements or business bank statements, and the answer is we use either. So if you have somebody that most of their business is coming through their personal bank statements, you can use those. If most of their money is coming through their business bank statements, you can use those as well. But we offer both options. And this is the final page of our slide, and I think really the end. We're almost to our time limit. And this is my contact information. Again, my name is John Wise. I'm a regional sales manager in the northwest portion of the United States for Angel Oak. You can reach me at john.wise@angeloakms.com, or the phone number will take you to our corporate office, and then obviously our website and our customer service email as well. We also have a chat function on our website. So if you ever go to angeloakms.com, there's a little chat function there that people man all the time, and you can get answers there as well. So I think that's it. I don't see any other questions come through. Kenyatta, I think I'll flip it back over to you.
John, I have one more question that came through. I don't know if I don't think I heard you answer this one. Did you get the question that says, do you have time to elaborate a little on investor program and typical investor borrower, and who a typical investor borrower would be?
Well, the great news is that our investor cash flow product is available to anyone. You don't have to have any landlord experience. You can have landlord experience or not. You can, if you're trying to buy your first investment property, that is it's a great loan because we don't put any restrictions on that landlord experience, and that opens it up to pretty much anybody. But what we really believe is that if you have a database and you can select in that database the people that you know have investment property, we think that you should be marketing this product because it's so easy to originate. And again, I'm happy to go through details. Again, up to 80% loan to value for properties that have positive cash flow, up to 75% for properties that have as much as a 20% loss on market rents versus PITI. So really, the options are unlimited. It's a great loan to sell. Is that it?
Somebody else asks, are there any prepayment penalties?
Yeah, so on our investor cash flow product, the standard prepay is 3 years, but you do have the ability to buy that prepay out. So it just depends on rate and price and term and situation, and similar to we have other investor products that are either bank statement or full doc products, and the standard prepay there is 2 years. But again, if you have a client that you think is going to pay it off in 12 months, then you can actually buy the prepay out.
And that was the last question I had. I didn't see any questions that came through, John.
Okay. Well, thank you, Kenyatta. Thank you for all that attended. We appreciate the chance to be in front of you today, and we appreciate the time that you took. I hope you learned something today about the non-QM business and how to grow your overall business with our products.
Yes, and thank you, John, for being here and being available to kind of teach this to everybody. We really appreciate it, and we hope that you all enjoyed it. And if you're not connected with us, please connect with us. NAMBA.org, NAMMBA.org, and see if we are already sitting near you. Thanks, John.
Thanks, everyone. Have a great day.
Have a great day.